Key levels in technical analysis. Key levels in technical analysis are specific price points on a chart where the market has historically reacted, either by reversing, pausing, or accelerating. Traders use them to identify potential entry and exit levels. Support and resistance. Let's go deep into support and resistance, because mastering these levels is like learning the language of price itself. Support is a level where buying pressure exceeds the selling pressure, thus the price moves upwards. In simple terms, it's a floor that bounces the price upward. Resistance is opposite. This is where the selling pressure exceeds the buying pressure, thus the price moves down. In other words, it's like a ceiling that price hits and starts moving down. So how do we use them? We sell at the resistance and buy at the support level. This happens because of market psychology. At a certain price level, traders remember what happened before. If price bounced at 0.0004 previously, buyers will likely buy again there. If price dropped at 0.0101 before, sellers will likely sell again. So it's about memory and crowd behavior. People anchor their decisions to previous outcomes. So resistance turns support. If price breaks through a previous support, it becomes a resistance and vice versa. Because if our resistance level was at 0.0002 and price breaks through, buyers will wait for the price to return to it and enter buy positions. Then the sellers who had entered at the resistance level will wait for the price to come back and close their losing positions. So how do we identify the levels of support and resistance? I want you to zoom out to higher time frames, especially the daily or the weekly, because these levels carry more weight compared to the lower time frames. Look for areas where price reversed multiple times. Use candle wicks, not just the bodies, because wicks show where price tested the level before rejecting it. Then think of zones, not exact lines. Price rarely turns at an exact number. Treat it as a range. You can see right there that the price reacted to this level with this wick and started moving down. So this can be our potential level of resistance. So we draw there a line and let's label it resistance. We also have this level right here. You can see the price reacted to it and now started moving up. So we can also mark this as our level of support. So we have these key levels. So let's wait and see what the price is going to do when it reaches these levels. So we can see the price has reached this level of resistance and it has started moving drastically down. So in this case, those who are aggressive traders, you could enter a sell position right here and target this level of support. So let's see what happens. Yeah, it has hit our take profit. It has reached this level of support. So we have talked about that when price reaches this support, it is most likely to bounce up and start moving upwards. But as you can see, it has broken through this level of support. So right here, we don't expect you enter immediately. So let's wait for the price to come back and retest this level. So as you can see, the price has come back to retest this level. So now this is where we say support becomes resistance because of what the price has done right here. Support turns to resistance. So if you are also another aggressive trader, what you can do, you can also enter a sell position right here. You can see this pattern here. This is what we call a marabuzo. So bearish pattern. So let's see what happens. This has also hit our take profit. So basically that is it for the levels of support and resistance. Previously I had made a more detailed video on how you can identify key levels of support and resistance. It's not that every support and resistance you see on the chart you must trade it. There are other factors you should consider. So if you haven't watched that video, the link is just above here. So click it so that you can watch it. Thank you and God bless you.